Alright everyone, welcome back to a new video. Now in this one, we'll be talking about a trade I took earlier this week. And before we get to that, this is the clip of that trade that I had live on Kick. So as you saw from that clip, that was a very decent trade for the E-mini S&P 500. I was using one contract and got a very nice win. Now the topic of this video will be specifically about key levels and why those are so important. And before we get to that, I want to talk about the reasons why I took that trade and how I decided to actually enter into the markets specifically. Now the trade you saw was on the 5th day of February. You can see right here, it is the same day. This is my VWAP chart here on Sierra chart. I'm not sponsored, by the way, if you're thinking. And we can see very clearly that that day markets dropped very hard. So how come I bought the markets? Wouldn't it have been better to sell? Yes, perhaps. I actually missed the sell entry. We can see that the sell entry to sell that day was clearly here. So anything after that, I think, was kind of late. So that's probably the main reason why I actually didn't sell that day. Also, I had another reason here, which you can see here on the cumulative delta. If you haven't seen my cumulative delta guide, make sure to watch that. So we had some pretty big news that explained why the price was dropping. But to get really into this specifically, why I decided to buy and why that level, we'll be talking about key levels in this video. Now, we're not going to go over the basics of what are key levels and all that. If you're interested in learning all of the basics, make sure to come and join my free trading Discord. The link is the top comment below. And also come and watch me on Kick when I'm live. I'm live every day, the same times. You can find the stream schedule on the Discord. So as you saw from that video, my entry was right around here at 68.09. So we'll put a line here. You can see that there's now a blue line there. And we'll talk about why I decided to enter there. But before we do that, I think it's kind of important to understand the overall context. Now we kind of went over this a bit. You can see that price actually dropped a lot that day. Basically from the session start, which is at 69.25, which you can't see, all the way down here, 68.09. This is over 100 points of price basically dropping all day. So logically, it makes sense that there has to be a bottom somewhere where price simply stops moving past. And at that point, price returns to a more kind of, we could say, reasonable area. Now, getting a 100-point price drop in the S&P 500, although it's not that common, now more recently these 100-point price moves have become more common. So what I noticed on that day basically was that at around this blue line here where I actually took my trade, you can see that price is clearly trying to go lower, but it just keeps failing, right? It's almost like the price is hitting this kind of a wall that it just simply can't move past. It keeps bouncing from the same place, right? You can see it here. So once, twice, 3 times, 4 times, 5 times, 6 times, it's basically bouncing. And then it decides to go. So when I noticed this kind of pattern, we could say, price started to go sideways between these two regions here, I initially thought that perhaps price was going to stay here for the rest of the day. Now, what is very interesting here, and this is going to be the second part of the video, and we're going to tie this topic together. If you just look below here at the cumulative delta, basically from this time here, where price touches the VWAP, you can see that the cumulative delta for all of this time is basically flat. From 9:45 all the way up to 1030, the cumulative delta is completely flat, even though price is dropping. So this was a huge clue for myself that something was changing in the markets. The sellers clearly weren't, price was going down, so they were obviously kind of overpowering the buyers, but not in the cumulative delta. And this is a classic delta divergence here, which in my opinion have become more relevant in recent times. When I made my cumulative delta guide, I didn't see as many delta divergences as we see currently. So learning about these delta divergences is very important, but you can basically see here that cumulative delta is going flat, even though price is going down. And this was a huge clue for myself that something was indeed changing in the markets. And at this point here, you can see in the later part right here, so this place here exactly, and this is actually what confirmed the buy for me. Okay, so I mentioned that previously I thought that when we came into this range, I thought that we were going to go sideways here and price was going to kind of consolidate at this place. However, when I saw that the cumulative delta was actually starting to rise closer to the zero level here, I thought that price had very big potential of actually returning to a higher price level. And you can actually see a very interesting thing here on the cumulative delta. You can see this big kind of gap between these two places here. I don't know how well you can see that, but you can see these almost like distributions here. So we have a distribution right there, and then we have a second one that is kind of like this. So there's this gap in between these two distributions. So I immediately, when seeing this, and I was looking at some other charts as well, but basically you can see this gap here. So this means that logically price shouldn't stay at that region. It should just fly through that. So obviously when I bought the market and when I started to see cumulative delta go upwards, I didn't think that price was going to go slightly higher. I did think that there was a big chance of price actually retracing or pulling back to much higher levels, simply because at this point the sellers must be very exhausted because price has dropped so drastically. So at some point there has to be a retracement or a pullback, and in this case it was around the VWAP, which is also very typical. After big price moves, it is very common for price to, in the later part of the day, retrace back or pull back to the VWAP, to the average price, or, we can say the fair value. Those were kind of the things that went on in my head when I took this trade, and that's exactly why I decided to enter at this region. Now to recap, price couldn't pass this level here. I recognized what price was bouncing from, and I got the confirmation in the cumulative delta. Bias was beginning to shift to the buy side. We had exhausted sellers, price was very stretched, and the bias was beginning to shift on the cumulative delta. I got my confirmation, took the entry, got a very clean entry as you saw on the clip. Also trailed my trade basically perfectly. Now obviously I could have gotten a slightly better stop, maybe around 10 points more, but it was pretty clean as trades go. Now that was it for this video. I really hope you enjoyed this in-depth look at my winning trade here. Make sure to leave a comment and like the video also, and subscribe. See y'all in the next one.